This is our Forex blog for September 2nd, 2011. And like most days, we want to look and see which currencies are strong and which ones are weak. In a perfect world, and on a perfect day, where you're more likely to catch bigger moves, you'll have all the time frame trends lining up from the real-time one at plus or minus 80 shows a strong trend. The intermediate time frame trend underneath there, which is about 1 to 2 hour trend. Underneath that we have the daily, weekly, and monthly. So when all the time frame trends line up, which we really only had one today, it appears, the euro weak across all time frames starting at 12:30 today, and it was extremely weak at 1. The Swiss, for the most part, was strong on all time frames except for the monthly. It takes a longer period of time for the monthly trend to change from down to up. The weekly trend switches before that, the daily trend switches before that, the intermediate time frame trend switches before that, and this one can switch on a dime. It can be in a strong uptrend and switch within 5 minutes to a downtrend. This one's extremely fast and very accurate. So you really want to trade some of the strongest pairs. The Swiss, when the euro was the weakest, was the strongest consistently. The yen probably would have been the second strongest one. Your odds always increase when all the time frame trends line up, or as many as possible. So basically you wanted to sell the euro Swiss coming into today, and as you can see, it took it about an hour and a half to really break down, but it really collapsed, and you knew ahead of time that the euro was the one to watch to sell, and you want to sell that against one of the stronger ones, and that was the Swiss. The Swiss was strong all day. So whether you got short when it broke down right here and you kind of stayed in that trade for a while, you either made 20 or 30 pips, got short again, made 100, shorted this pullback, made another 100, nice little sideways range. You might have gotten short here and lost, short again here and made 80, shorted here and lost, shorted here and made 20 pips, shorted here and made 40 pips, shorted here and made 20. Not every trade's going to work, but the vast majority of the time when you're in the currency that's most likely to move, you're going to find bigger moves. Now notice how little it moved earlier today. This bar right here is about a 7 pip bar. This one's 7. This one only has a 4 pip range. So you could put on something like a 9 pip per bar range chart, and it really gets rid of a lot of the sideways non-trending aspect of the market. As you can see, during that sideways time where there was no movement, you got a lot fewer bars, and it becomes a lot clearer how to trade it. When it breaks down underneath the low, you go short, and your stop is right above the high here. Hold on a second there. Every time it goes down and kind of consolidates, you might want to yank your stop down. Most of the time, currencies that are in a strong trend will make at least a two-wave move. So you might have wanted to exit, the last part of your trade right here at the fib target. And it never really got a bounce off there. Most of the time the fib target gets a pretty decent 38% retracement bounce, and it didn't. So you might have wanted to sell this low here, again with your fib target. This is the third wave down, as a good place to get out of the trade. Lots of excellent trades in the Euro Swiss. Now the yen also was quite strong on most time frames, really up until about 5:30 and 7. So the euro yen, also excellent one to look to sell. As you can see, it broke down, fell about 20-30 pips, pullback trade, fell another 40 pips, and so forth. Let's take a look at this on a 5 pip per bar. That's approximate number of pips per bar that this one moves on a 5-minute chart. And you can see, scrolling back to midnight, there's a lot fewer bars when the market's not doing anything. It's a lot clearer. Anytime you have a nice little rectangle pattern with at least 5 bars, the breakout is pretty decent. You also have nice little patterns on here. Once the market trends down, you have a counter trend move. You can go short with this as your profit target. And I didn't draw that correctly on there. Let me get rid of that. I readjusted my mouse and made it more sensitive, but it's too sensitive. So that makes a good profit target. It's about 25 pips away. You're risking about 10 pips. Anytime you have a probably 60 or 70% odds trade, it's likely to make you 1.5 to 2 times or more bigger wins than your loss, you got to take the trade. And you had, another pullback trade right here. Actually, no, this is the trade that you took. The market kept going down. You have another pullback trade right here, and that one, it didn't go down to the fib target. A lot of times markets reverse. It might have been a major support level here. When you got into that trade, your stop would have been 1 to 3 pips above that high. And when it goes down and breaks this low right here, and you can see a clear double bottom right there, you can't go lower. You either put your stop above this little sideways consolidation if you really believe in the trend, or you just get out with a small, 6 to 12 pip profit. So that's the Euro Swiss and Euro Yen, some of the higher odds trades. You can see the trend of the pounds shifted up about 3 right here, and it's quite strong. You want to trade this against one of the weaker ones. And the dollar and yen aren't really weak. The CAD was one of the weaker ones, and the Australian was one of the weaker ones. By the way, let's just quickly show the Australian Swiss sell earlier today too. And I'll just put this on a 5-minute chart. Weak Australian, strong Swiss, and again, it didn't break out through the low until about right here. But you can see it went down 200 pips during the day. And if you missed that first move, you always have this nice little, trend line pullback short right here. One of our new tools that we just released this week is called the FX ADX, and it also, in these strong trends like this, it becomes a no-brainer. Anytime you see a currency fall with plus 14 or minus 14 weakness, and you get a pullback where it doesn't even go green at all, it's probably 70% likely to work. And so, the FX ADX is another trend tool which compares all the currencies, all the rest of them, and look where it went, right to the fib target. Perfect target, perfect entry, perfect currency when you have, this kind of weakness. Here's the Euro Swiss, just so you can see how it looks on that chart. Extreme weakness on the way down, pullback, no green at all. It's extremely weak, and even earlier it showed an extreme weakness right here, which made you even more likely to want to sell this breakdown right here, and it fell well over 100 pips. So our tools are extremely accurate, better than they've ever been, and we're never going to stop trying to improve them. But you can also see the Australian Swiss, the pound around 3 became strong, the CAD was weak, and you could have traded the CAD Swiss on the short side as well. But I'm going to show the Euro Swiss. Notice again, extreme weakness, the pullback, there's no green whatsoever. You shorted again, tremendous number of pips in this one as well. Pound CAD, strong pound, weak CAD, and not quite to the same level of strength as Swiss had, but at 3 when it became strong, you want to start buying pullbacks. Not every trade is going to move 30 to 150 pips. You can see this one went up about 25, pulled back, didn't break that low here. You might have went short, or you might have also waited for it to break out over this high right here. And more than likely you would have been into that trade here. Your stop's underneath there. You had to sit and wait. You're underwater a little bit before it broke out and then took off. So you might have had a loss here if you didn't want to sit through this pullback. But the currency meter also predicted a big move in this, and you can see that the CAD at 6 o'clock became extremely weak, and way back at 3 it became weak as well. And sometimes a currency, the pound might be going up against some of the other or most of the other pairs, and the CAD might be weaker, but against each other they just kind of go sideways. You got to wait for sideways breakout, or once it does start to move up or down, wait for the pullback trade and get into it. One last trade I'll show. As you can see, the pound became strong at 3. The Australian was quite weak at 3. The pound Australian, also a good one to buy, especially at 3 o'clock. You can see, trending up. You waited for that breakout right here. You probably would have had a loss in that, and the second trade went up about 40 pips.